If your business just received a letter from the California Employment Development Department, the EDD, take a deep breath. You're about to deal with the most aggressive payroll tax agency in America, in our opinion. An EDD audit can reach back 3 years. It can reclassify every contractor you've ever hired and stack penalties that far exceed the tax itself. So the real question is, what records does the auditor actually have a right to see? And how much information should you hand over? Hi, my name is David W. Klasing. I'm a dual licensed tax attorney and CPA, and I've helped hundreds of California businesses survive and even win EDD audits over the last 30 years. Today, I'll walk you through what the EDD demands, how to limit the scope of an audit, and how to avoid the multi-agency domino effect that can turn a payroll tax audit into a full-blown federal criminal tax investigation in the wrong circumstances. Let's start with what information an EDD auditor can demand. By law, under California Employment Insurance Code sections 1085 through 1092, every California business must keep certain records and produce them upon request during business hours. Here's the short list of what the auditor will start with. Bank statements, canceled checks, your general ledger, the financial statements, the profit loss, the balance sheet, your cash flow statement, federal and state income tax returns, Forms 1099s, and contractor worksheets. These documents are the auditory documentation backbone. Cash in, cash out, and everyone who got paid in any manner is at issue. Next comes your wage reporting, payroll journals and summaries, employee earnings records, canceled payroll checks or direct deposit stubs, reports for payroll processors like ADP or Paychecks. Eventually, they're going to match every number against your state and federal filing. Forms 941, 940, W-2, DE-9, and DE-9C reports. If these documents don't reconcile, the EDD will assume something was hidden. Let's talk about the EDD auditor's favorite target. Here's where we see businesses in California get hit the hardest. Independent contractors. The EDD examiners will demand contracts, invoices, proof of business licenses, and evidence that each contractor that you utilize truly operates independently. If you can't prove that independence under California's ABC test, they will reclassify every one of them as employees. Then they're going to retroactively assess payroll taxes for 3 years and add a 15% late deposit penalty. That's often enough to cripple a small business. The first rule of survival here, control the scope of an EDD audit. It's usually going to start with 3 full years of records, but their audit manual allows agents to begin with a single test year. If your books for that sample year tie out cleanly, you can negotiate to close the file right there. Fail to negotiate, and you triple your exposure, your paperwork, and your professional fees. You usually have 30 days from the first contact to the entrance interview. At our firm, we use these weeks very strategically. In days 1 through 10, we gather and index every document for the test year. Days 11 through 30, we reconcile returns to the general ledger. We build a defense for every contractor that you use, and we prepare clear explanations for any cash movement. We walk into that meeting organized. If you walk in unorganized, you're telling the auditor, hey, go fishing. Walk in ready, and you tell them, this business is clean. Here's what happens after the field work. Once the field work ends, you'll have an exit interview. There are 4 possible outcomes. A no change. You're in the clear. Honestly, in my 30-year career, very rare. An overpayment, you actually get a credit. I have never seen that. An underpayment, you owe and penalties start immediately. See that all the time. Mix. Some quarters go up, some quarters go down. If you disagree, you can request a supervisor conference or file a petition for reassessment with the California Unemployment Insurance Appeals Board. But you only have 30 days to act once you get that audit report. Here's what most California business owners don't realize. The moment the EDD finalizes its work papers, they automatically share this information with California's Joint Enforcement Strike Force. That means that the IRS, the California Franchise Tax Board, the California Department of Tax and Fee Administration, and the Department of Industrial Relations can all open matching investigations caused by a single bad payroll file. This can trigger trust fund recovery penalties, sales tax audits, and even wage and hour lawsuits. An EDD audit is never clearly just about payroll. When an EDD auditor calls our clients, we step in immediately. We limit the audit to one test year where we can. We produce only the records legally required, and we present them in an index binder showing data integrity and control. We also build a legal defense for every contractor that you utilize, and we draft a position letter that shows why reclassification or fraud penalties will not apply. If the auditor insists on adjustments, we handle the rebuttal, the supervisory conference, and if needed, the appeal. Because we're simultaneously both attorneys and CPAs, our clients receive attorney-client privilege, work product privilege, and accounting support. There's no standalone preparer out there that can match the services that we offer. If you've received the dreaded EDD letter, don't ignore it. Whatever you do, don't face it alone. The first call you make can determine whether you're dealing with an inconvenience or a financial disaster. We will help you control the scope, protect your records, and resolve the case before it triggers federal attention. Call the tax law offices of David W. Klasing for a confidential, reduced-rate initial consultation. We will help you manage the audit before it manages you.